All right, good afternoon, everybody. Hope everybody's doing well. I'm coming to you from the very warm northeast part of the country. I'm in Connecticut, and it's really kind of bizarro because it's 65 degrees out, and it's February, and it should be snowing. But I'm not a weatherman. I am a stock market person, and I have a pretty extensive background. Actually, I have an extremely extensive background in, the marketing people say I should promote myself more, but I don't know. It's just not my personality. But anyway, I was brought into the trading industry by Mario Gabelli, who's one of the greatest money managers in history. I traded for directly for Steve Cohen, who's one of the greatest traders in history. In my opinion, he probably is, at least as far as that I know of. I was the head of trading at three different institutional money managers. I oversaw pretty much every trading strategy or style you can think of, including those hedge funds. I know retail investors are mystified by hedge funds, but if you go check out on our stockmarketjobber.com site under market lessons, I do a lesson where I explain what hedge funds actually are. Um, so, anyway, enough about me. Let's talk about how you can make money. I'm not recommending a trade here on Lyft yet, but I think there's a chance that we might see a bounce relatively soon, and this is something you should have on your radar screen. All right. Now let's talk about why. First of all, the stock is extremely oversold. This down here is what we call the RSI indicator. It's relative strength indicator. It measures momentum. Momentum is how far a stock has moved in a given period of time. You see where it says 14 there? That means it's 14 days. Most of the time, stocks are in their normal or typical or usual trading ranges. If something gets below that, we call that oversold. Now, this is important because traders will be expecting a reversion to the mean. In this case, it would be buying. It would get back into that range. So these investors who come into the market because it's oversold might drive the price up with their buy orders. The other thing is we're getting close to support. Now we're not there yet. I don't know if we're going to get there today. It's I don't even know what time it is. It's like 3:15 or whatever. But over the next few days, next week, if we get down to the support level, there's a good chance we get some kind of a tradable bounce here. Now, one of the principles of financial markets, and one of the things that we talk a lot about at Stock Market Jobber, is oversold stocks, or I use the term stock, but it could be any security, bonds, cryptos. Oversold securities that get to support tend to bounce. Now, I talked about oversold. What is support? When a market's trending lower, there's not enough demand or buy orders, you can use those terms interchangeably, to absorb all of the supply. So the sellers need to offer their shares out at a discount in order to get buyers interested. When we get to a support level, well, all of a sudden, there's a lot of buy interest. As a matter of fact, there's enough buy interest to absorb all of the sell orders, or there's enough demand or buy orders to take in all of those sell orders, and the trends or the market stops going lower. So support is a large concentration of buy orders at a certain price, or close to a certain price. In this case, it's 980. This stock is currently trading at 1032, but I mean, the way it's going, it could get there over the next few days. Now, levels that were support or resistance, in this case, we're just going to focus on support, they tend to stay intact for a while. An important price level can retain its importance for a long time. And back in December, when Lyft got to 980, it rallied. So there's a good chance if Lyft gets to 980, it rallies again. Oversold stocks that get to support tend to rally or rebound. I mean, I'm not talking about where it's going to be in 3 years or 5 years. That I don't know. I'm just speaking as a trader, like maybe a day trader or a swing trader. So if we get there, what a good strategy is not to just buy it at 980. It's to wait for the reversal to start and maybe buy it if it gets back up to say 10, because that'll kind of tell you, all right, well, it is reversing. If you just buy it at 980, you might get run over. On Wall Street, we call that catching a falling knife. Just because it gets to support doesn't mean it's not going to go lower. So let's just assume that I'm right and I'm not, I mean, the market's always right. I'm not always right. No one's always right, but the market's always right. But if we wait till we get that reversal, we can stack the odds in our favor. You're not going to get the bottom price, but you're going to get on. You're going to be a momentum trader. You're going to jump in after the momentum starts. Now, what could be a possible exit strategy? Everyone likes to talk about the stock that they buy. No one really ever talks about what their exit strategy is. And the exit strategy is even more important than what you're buying. So I would say this is what we call a trend line. If you buy it here and it starts moving higher, you just stick with it. You stay along. If it crosses this trend line, that's your exit strategy. So remember, everybody, and I can't say this enough. Having an exit strategy is probably the most important thing that there is in trading. It's not just buying something and just hoping it goes your way. Knowing how to get out of a position is more important than knowing what to buy. All right? So think about your exit strategy for a price target. My price target here would be up around 615 because this was an important level. See, it was resistance and it became support. You can learn more about how resistance becomes support on our site. But if we get to 16, that's my 1615, that's my sell target. If we break this uptrend line, I'm just going to bail. I mean, I'm not making this trade myself. Let me make that very clear. At this point in my life, I'm just interested in teaching people. But what I would do is if it starts to rally and I buy it around 980 and it gets up to, say, 12 and it crosses the trend line, that's where I get out. If it gets up to 14, crosses the trend line, that's where I get out. This is what's called a trailing stop strategy. So we have our trailing stop exit strategy and we have our price target strategy. All right, everybody. Thank you so much. Please sign up for stockmarketjobber.com and please check out our website. Uh, yeah. So let me say that again. Please subscribe to our YouTube page here and please check out stockmarketjobber.com. And I will see you soon. Thank you, everybody.